FP&A is providing more direct value to management because they have all of this information. I think, first of all, we have to look at the overall structure of the finance function. A lot of people outside of finance tend to lump finance into one big bucket. Oh, this is all one thing. Actually, there's some very well-defined segments of a finance function. And the way I think about it is sort of to think about accounting versus the FP&A piece. And if you put that on a spectrum or a timeline, imagine you've got a timeline from the past to the present. And at point zero is the very beginning of the present. Well, what is point zero in my mind? Well, point zero means this is where all the debits equal the credits. This is where a company has a trial balance that reflects all of the financial activity that has occurred up to that point. That is accounting in my mind. That's accounting's job, is to get you to point zero. I often think of accounting as the controller functions, but it's the accounts payable, accounts receivable, all those things that you need to record information and get it in a way that that's ready to be used. FP&A, on the other hand, is everything you do with that information from point zero. You put it into meaningful reports with comparisons to budgets and forecasts. You analyze variances between budgets and forecasts and actual results. You prepare predictive analysis. Maybe you do cohort level data. You forecast. You do an annual budget. You use this information for strategic planning. You create advanced metrics, lifetime value, churn ratios, customer acquisition cost. All these things FP&A does using the data from accounting. And so if you think of that, obviously in the scope of things, FP&A is providing more direct value to management because they have all of this information. I remember when I was a CFO for a public company, and we were in the process of closing our books to get ready for filing our S1 with the period in there. And obviously we needed to close that quarter, and I knew exactly what we needed in terms of earnings per share, and I knew what I wanted to see, and I knew what I expected to see, but we hadn't closed the books. And I remember I'm pacing back and forth into my controller's office, and I'm kind of like, hey, have we closed? Have we closed? And she's like, leave me alone until we get a chance. I'm working on it. So finally, I just walk away and I give her some space, and I come by her office, and she goes, John, come on in. She goes, we're closed. And I said, oh, tell me, how do we do? And it's funny because she was all excited. We've closed. I said, how do we do? And I'm thinking, tell me, how do we compare to what we forecast? And she kind of pauses, and she says, I don't really know. And I realized at that moment that for her, close meant all the process of closing is complete. I'm at point zero. The debits equal the credits. I have a trial balance, but I have absolutely no context for it. She doesn't know what it means. She doesn't know how it compares to anything. She doesn't know what we expected. All she knows is that the process is complete. And that's great, but that didn't tell me what I needed to know. So then I had to turn that information over to my head of FP&A, who plugged it into our models to see how that compared and to the guidance we provided, and put all that together. So that's the FP&A piece. So that's why I say FP&A provides more direct value to me as a manager, and overall. Accounting gets you to a certain point. You could think of accounting as sort of getting to point zero. Accounting gets you there, and it's sort of like all the processes that bring the electricity to the wall outlet on the outlet on your wall. Okay, the electricity is now there and ready to be used. But quite honestly, if you don't have anything to plug in, then it's not particularly meaningful. What you plug in, that's your FP&A function. I'm going to use an example here because I think this is how I think about the CFO role. And I'll use the example of a point guard in basketball. So the point guard in basketball is generally the individual who handles the ball most of the time, who dribbles the ball down the court, who thinks about how to start the play, who's going to get the ball next, who are they going to pass the ball to, those kind of things. And I think a CFO is somewhat similar to that. They initiate the process of discussion about business. They bring the ball down the court. They're in charge of all the transaction processing and everything that's involved in the business. And then they figure out, where do they need to put that ball? Where do they need to put that information to have it be impactful and make a difference? So and just like the point guard says, hey, this guy's got a hot hand and he's wide open, I'm going to throw him the ball. The good CFO says, hey, I need to give marketing this information about the impact of their advertising program so they can decide how to allocate their funds across different channels more effectively. The other thing that a point guard does, though, is sometimes a point guard has to take a shot himself. And I think a good CFO also is able to do that. And by that, I mean, a CFO is sitting at the management table with a finance perspective, but also the ability to take the finance hat off and look at things from a business standpoint overall. Well, they might say, for example, that may affect our net income negatively. However, it's the right move for the business. Maybe we should spend this money now, even if it will impact our ability to achieve our budget, because the benefits are so great going forward. We saw that a lot with during COVID-19. CFOs had to make a lot of decisions that kind of go against everything they had been trained to do, because from a business standpoint, they were the right decisions, even though they were not necessarily the traditionally appropriate decisions. So I think from a successful CFO handles information, decides who needs information, understands information, and the cross-functional needs for information, and ultimately, I think is in a really great spot, because if you think of the one function that transcends any other function, it's finance. The CFO, he or she is speaking with every function, understanding their issues, and translating it back into those things that become a common scoreboard for the business. We talked a lot about FP&A, about accounting, about the different roles of finance. And I want to just take a moment to think about how I would organize a finance function in the context of that. And the first thing you need to realize is, and I think it's been clear here, the types of people you generally have in the accounting functions are really often have very different ambitions and interests and motivations than the types of individuals you might find in an FP&A function. And it's one of the things that makes being a CFO really interesting, is that you're dealing with people with a lot of different perspectives and a lot of different needs. But I'll give you an example. If you meet your typical accounts payable clerk, think of what is involved in their job. Every day they come in, invoices come into their queue, they look at them, they process them, they make sure that they should be paid and get the appropriate approvals, and they pay them. And it's pretty much an ongoing job. It doesn't change dramatically from time to time. Hopefully it gets more productive over time. Some people would like it and some people wouldn't like it. It's a job where you're probably busy all the time. It's also, in my experience, accounts payable clerks would tend to be focused on, more balancing work-life things and not necessarily looking for ambiguity and ambition and additional opportunity. Not always. There's always exceptions to everything, but that's just a general feeling. The typical FP&A person, on the other hand, tends to be driven by curiosity, and you find that a lot of FP&A people are fairly ambitious. That's why a lot of big companies will get someone out of an MBA program to come in and at an entry-level FP&A role, because they want people who can take information and continue to grow, who can keep moving up that hierarchy into greater and greater analytical interest. And so when you think about that, you think about those different kinds of people, it kind of stands to reason that you want your controller functions to be as automated as possible and almost assembly line in nature. You want to do them with maximum amount of efficiency, almost when I hear Six Sigma, which doesn't really apply to most companies, but that level of quality control is really important in accounting. You can't allow for much many errors in the controller functions. And that's why you have so many controls like debits equal credits and that kind of thing. And so you need staff and tools that are process oriented and are comfortable manning that assembly line of getting you to point zero each and every day. FP&A, I would think in a way it's sort of like an orchestra in classical music. Their goal is not to write new songs. Their goal is to faithfully interpret the composition, however Bach or Beethoven or Chopin wrote it. Their job is to faithfully interpret that, not to change it. FP&A, on the other hand, it's more free form. It's kind of like jazz. You want musicians who can connect a wider variety of dots, who are very comfortable going outside the normal range of things and looking at information differently. And so you need a different kind of person in that sort of role. Also, interestingly, FP&A now increasingly is getting blurred with business intelligence. And that means that you've got to have a deep understanding of data warehousing and collecting data and that kind of thing. So that has some real implications. If you think about organizing your finance function, you're going to attract people in FP&A who tend to be curious, who tend to want to solve new problems, and will tend to be more ambitious for movement, both within the organization and for their career in general, wherever it is. Whereas in accounting, you'll tend to find people who are looking more, again, for a lifestyle business. That means you're going to have higher attrition in the FP&A function than in an accounting function, most likely, because you've got people who are looking to move up the ladder in their career. In my experience, the FP&A functions tend to be a little bit younger and tend to have people who are, using this as more of a stepping stone. One of the implications of that is that it makes it all the more important that you have real structure and system and systems within your FP&A function. Meaning, because you're going to lose people, you're going to have good people who are going to move on. Either they're going to move on in your company to bigger roles, or they're going to move on in other companies. So if all your analytical knowledge is sitting in the heads of the that FP&A person, and in a whole batch of 8,000 spreadsheets that only they understand, when they leave at some point, and they will, then you're going to be left in a dire situation. So you need a system and a structure for your forecasting, for your reporting, for your calculation of metrics, for your definition of that overall analytical framework. And that's I think that's really important. Too many companies are highly reliant on one FP&A individual or two FP&A individuals, and all of a sudden that person leaves, and it's catastrophic to the overall management information system.
To learn how FutureView software solutions can help your finance function, visit us at FutureViewSystems.com.